Your market news now, a slew of weaker than expected data from China, from industrial output to retail sales and home prices, has raised concerns over the strength of recovery in the world's second biggest economy and spurred calls for more policy stimulus to bolster growth. An earnings release by Tencent later may aid sentiment in China. The tech giant is expected to post its biggest rise in quarterly revenue since 2021 on a gradual recovery in spending and advertising. Locally, shares of Telkom fell 30% on the JSE earlier after the company warned it expects to report a big drop in profit in the next annual results after impairment charges, restructuring costs as well as tax charges. The company's overall performance continues to be affected by the group's migration from the legacy voice businesses, which has been declining in recent years as people favor newer technologies such as fiber. To give us a little bit more details when it comes to the markets, we are joined by Carmen Belwana, who is from Sanlam Investments. Carmen, thank you so much for your time. Your sense of the market sentiment right now, given the price action we've seen over the past few days, as well as you take in that uncertainty regarding the U.S. debt ceiling?
Yeah, so it remains very muted. I think the market's trading with a lot of caution, specifically after the political fallout towards the end of last week. We see the rand still languishing above the 19 rand to the dollar level. So I think that adding on to the fact that load shedding seems to be not just exacerbating, but at levels that are very concerning for various sectors, this continues to be an overhang for the markets as it stands.
So let's talk about Telkom, and we do have a chart for the viewers to have a look at its share price movement year to date. Earlier on, it was down about 13%, and this was on the back of the company announcing that they may be considering an impairment charge. They are releasing their results on June 13th. However, what did you make of the trading update, and what do you make of Telkom overall, given its rivals and the kind of balance sheet they've got?
Yeah, so obviously the third largest telcos listed in the country. Big miss in terms of these numbers. So normalized HEPS down between 60 to 80%. Don't think the market was expecting that. And so we've seen the share price reaction, as you've mentioned, on the back of the announcement that they're looking to do a 13 billion rand impairment. Just as a relative, prior to this update coming out, Telkom was trading at a market cap of 16 billion. So just as an indicative of the level of or the extent of the impairment. I think adding on to that, this is part of their strategy, as they've said, but definitely not expected by the market. I think at this point, a lot of the trade was related to the hopes that there'd be a deal that would ensue, but this still hasn't come to pass. So the market has therefore pulled back significantly today on the back of this big miss.
Right, and I'm looking forward to seeing the results, and I'm sure in that particular week we'll discuss it in depth. However, let's move stateside now and look at the dollar's performance, seeing that it was suppressed by the bets that, the Fed might cut. What do you make of the performance we've seen so far?
Yeah, so we'll remember that towards the end of last year, we saw the US dollar at parity with the euro. Was trading very, very strong, but has pulled back since then. A lot of it is a lot of the basis of it is related to the fact that the market is expecting the Fed to pause the rate hikes and sort of bring the quantitative tightening cycle to an end. And so we do expect that the US dollar will weaken going into that. I think adding on to that as well, as you've mentioned earlier, the concern around the debt ceiling and a negotiation or an agreement on that will also be an overhang and should lead to some more erosion on the US dollar in the near term.
So when you look at what's happening in the market stateside, do you get the sense that the equity bulls are counting on a rate cut or a soft landing?
So it's very difficult to say. Anecdotally, I've seen a recent commentary around how markets are now moving on commentary out of from the Fed governors. So it's literally on which macro numbers are coming out. What do the jobs numbers look like? We did see the Fed increase by 25 bips earlier in the month, and now reaching a 17-year high on the interest rate in the US. The expectation also is that inflation has likely peaked. So on the rhetoric from the Fed chair, Powell, saying that not a definitive that there will be a pause on rate hikes, but leaning towards that way. I don't think the market really liked this that much. So having said that, I don't think that the bulls are pricing in a rate cut, but there's certainly still the outlook in terms of whether or not there will be a soft landing for a recession in the US.
Let's stay with the central bank theme. Next week, we have the South African Reserve Bank delivering their interest rate decision. And given where the rand has been trading at, reaching a high of 1951 at some point last week, what are your expectations going into Thursday's meeting?
So on the back of the recent CPI numbers out of South Africa, we are seeing that inflation still hasn't turned that corner to give us a sentiment that we are seeing a turnaround and recovery. So definitely the market's pricing in an increase and likely at about 50 pips again, unfortunately.
Well, before I let you go, I mean, given that environment that we're talking about where you're going to see these high interest rates, 50 basis points possibly, and the pressure that we're seeing out there, at least from the local economy, which sectors are likely to be vulnerable with this economic background?
So I think the key thing for the rest of the year is definitely going to be around the energy crisis in South Africa. It's unlikely that we're going to see an end in the near term. So definitely load shedding is the overriding theme locally. And so in looking at that, I think one of the key sectors that we don't discuss enough is the agricultural sector, which is heavily reliant on power to ensure its irrigation systems works properly. Feeding on from that would be your food manufacturers and also your food retailers, who would see an exacerbation in price coming from the manufacturers. But also on the retail side is the inconsistency or instability of the energy in the stores. I think those are probably one of the key sectors that I would be most concerned about, and that's probably the most vulnerable at the moment.
All right, Carmen, let's leave it there. Thank you so much for your time. That is Carmen Mbelwana from Sanlam Investments. And just to touch a bit on where Telkom is currently trading at, it's down 14.1% as it stands, trading at 26.94 Rand after the company says that it is considering writing down the value of its assets by nearly 13 billion Rand. We'll definitely have that interview for you with the CEO come June 13th. However, that is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.